Well, OTC is on in Houston, and Mrs. Orishemeiwa Eyeson, who is the chief executive of the Nigerian Upstream Petroleum Regulatory Commission, says Nigeria's oil and gas sector is undergoing a transformation driven by growing local participation, climate targets, and renewed investment momentum. Speaking at the 2026 Offshore Technology Conference in London, US, I beg your pardon, Houston, Mrs. Eyeson said indigenous firms were playing an increasing role in the sector, with nearly 100 Nigerian companies now active. She stressed that Nigeria is targeting zero gas flaring by 2030 and net zero emissions by 2060, noting that flaring has already dropped below 10%. Mrs. Eyeson described the Petroleum Industry Act as a game changer that had improved regulatory clarity and investor confidence, while emphasizing continuous policy adjustment to sustain competitiveness. Well, let's talk to Dr. Ayodele Oni. He is live in Houston for this very important oil and gas conference. He's an energy lawyer and analyst with Bloomfield Practice. Thank you so much, Dr. Oni. It's good to have you live to join us from Houston for this conversation.
Thank you. Thank you very much for having me.
All right, then. Well, let me start with, I'm sure you've attended sessions and all of it. I see that Nigeria is really standing tall this time around. Local representation, companies playing big. Tell us what you're learning at this time.
Okay, very interesting. Your volume is low, though, if you could speak up a bit, but I think I could make sense of what you're saying. Well, the theme for this year for Nigeria is Africa's energy transformation. I think it's scaling investment, technology, and local capacity for sustainable growth. Now, there have been sessions where particularly Mrs. Eyeson did speak, and she unveiled a long-term energy plan covering 2030 to 2060. She spoke about reducing gas flaring, spoke about having more indigenous players. That's what we see. Spoke about government policies now seeing some results. For example, the number of projects, Zaba, FID on a number of projects, the HI project, a number of those interesting projects, particularly gas. And she emphasized the continuing importance of gas. The impact of gas continues to increase, its importance and its relevance. And, a number of these indigenous companies have bought assets, Renaissance, Ayodele, Seplat, Oando. Interestingly, I did advise on the Oando deal on the government side. So I am aware of these transactions. So, yeah, it shows that Nigeria is ready for business and government policies are beginning to see results, particularly policies in the oil and gas sector.
We will still stay more with regards to these policies. I hope you can hear me better now.
Yes, I can.
Great stuff. Now, talking about unveiling a long-term energy plan, I was interested in what the NUPRC's boss talked about. But do you think Nigeria is really set for this energy plan? Now, with regards to transition, one way or the other, I'm sure the issue in the Middle East would have been raised also at this gathering. What are you also learning with regards to that?
Okay, we have the climate, we have the act, the climate, I think it's the Climate Change Act, that speaks to our energy transition. And we do have within the presidency an office to deal with climate change. So I do not think an energy transition, right? But gas, and that's been said a lot of times, that gas is a transition fuel. Our gas reserves are expected to last for at least 85 years, whilst the oil reserves are around 59 years, recently, I think it was announced by the NUPRC that it's about 215 trillion cubic feet of gas, an increase from around 190 prior to now. So its relevance continues to increase, and with the war in Iran and the Strait of Hormuz, more people are speaking to energy transition issues, decarbonization, going green, finding those alternatives such as solar, but gas continues to be relevant, and some will argue that there's certain projects that you still need gas, certain industrial production that gas still does play a role, and renewables will struggle a bit, So I think that's emphasized the need. The war has emphasized the need to also have alternative routes, right? And increasingly, countries are looking at Nigeria as an alternative. I'm sure you're aware, more countries, even the US, is buying aviation fuel from the Dangote refinery. So people are beginning to look at Nigeria, look at Africa as an alternative to some other countries, even in the Middle East, in Europe, Russia, for example, and Russian gas. So those are conversations that were had and that were set for business, and indigenous companies are doing much more than they had ever done.
Well, let's take a step backwards and look at the Petroleum Industry Act and, of course, all of the executive orders instituted by the presidency. Would you say this is the reason why local firms are becoming more attractive with regards to the drive in the oil and gas sector globally now, not just in Nigeria?
Well, I would say it's played a role. I would say it's a catalyst, but I wouldn't say that's the reason. Even before before the Petroleum Industry Act, a number of companies like Ayodele have started to play. Before then, it was known as Niger Delta. A number of companies like Ayodele have started to play in the oil and gas sector. But with the PIA, it does provide set rules, provides a play around gas. Prior to now, the Petroleum Act, I think if you look at the Petroleum Act, you see natural gas mentioned only once and in the definition of petroleum. So the PIA has played its role, but I think more around policies, because people would say particularly the Executive Act, reducing contracting circle, trying to reduce corruption around that, giving investment tax credits, investment tax, you got those allowances too. If for gas production and non-associated gas, there are incentives. There is what is known as import duty exemption certificate when you do your gas projects and you want to bring in equipment. Those have meant that local companies are even able to better play, because cost of doing that business also reduces. Imagine you have to bring in a $1.5 billion gas equipment and you need to pay 20% of that as customs duty. It just increases the cost of doing business. So having taken out some of these costs, is beneficial to smaller companies, independent, who are not as deep-pocketed as the international oil companies. So that's a fair point around those DPIA and around those executive orders. I think they played a critical role. They're not the only reason, but they played a critical role.
Interesting stuff. Again, staying with gas, the issue of infrastructure comes in, and we see a lot of development coming around. I think we spoke about the milestone reached by the NNPC in recent times. We still have the AKK. I think a lot of work going on around. I think we're getting to train 7 now, going to train 8. A lot of work also going around that space. But are we building enough infrastructure to harness this proven and unproven gas reserves that we say we have? You're talking about us having gas that could last us for about 80-something years. That's a lot. But are we actually preparing to take advantage of this?
Okay, yes. Gas, like crude oil in the ground without infrastructure, facilities to take it to end users, is worthless or nearly worthless. You'd sell and then have to buy back finished product at a higher cost, and then it impacts adversely your balance of trade and balance of payment. So with infrastructure, which is what government is doing, there's the OBEN 3. Recall the AKK is over 90%. I think it's 96. The OBEN, or is it the OBEN that is 96? The AKK is 93, right? We've made a lot of progress around infrastructure, and it's historical. For a long time, the commercial arrangement for gas locally was bad. So no one would invest. Even you won't invest in a business where you spend, your cost of production is 10 naira and government is forcing you to sell for 8 naira, unless you're running a charity. So all of this infrastructure should have been built over time, say the past 30, 40 years. But for a long time, nothing was done. So, and our revenues have been dropping. So, based on our income, the income we generate now, I think quite a bit is being done, both by the government and the private sector. We're not there yet, and it won't be as easy as we all expect, because if you had to spend $10 billion every year for a 10-year period and spend zero, Of course, in the 10th year or 20th, 15th year, you can now not spend that 10 billion. You have to spend multiples of hundreds of billions of dollars. That's where we are. That's why it's taking is more difficult than it should be. So we're not there yet, but there's a lot of progress. And it started with having good policies around local content, having good policies around the PIA, because prior to now there was no demarcation statutorily for downstream, midstream gas, upstream gas, a separation between gas and liquid hydrocarbons. But we had a good law, relatively good law, and then you have others, and you have a lot more guys come to play, particularly midstream and some downstream, because those are critical aspects. Upstream usually will give you your forex, but you need to industrialize, to move forward, to even have electric power. The midstream too does need to work. Pipelines, a combination of pipelines, virtual pipeline arrangement, and everything else in between, and strict licensing that is also fair and equitable.
Well, let's talk about UAE leaving OPEC. I'm sure that will also be raised. I'm sure that should be a concern at the OTC. I attended ADIPEC back to back, and I saw how well Abu Dhabi, I'm talking ADNOC, I think that's the name of the company, a lot of work they do with regards to production. I think they were doing up over 3 million barrels per day as we speak. So, that to me is very significant. And they're leaving OPEC just like that. I think there should be concerns. What do you think? Or what are you hearing about this?
It's national interest. And I think what did happen with this war may also have signaled it. If you have a quota and you can produce way more than your quota, you probably want to leave rather than always seem to breach what your quota is. Unlike in Nigeria where we struggle with our quota, right? That's improved, but we still aren't there. So I think they left so that it'd be a good alternative and so that they can make the most out of their production. And recall that production does have a lifetime. That lifetime or lifespan. That's why we say it's non-renewable, right? Unlike sunlight and the rest that are renewable energy. Petroleum, crude is going to finish someday, gas is going to finish someday. So they need to make the most out of what they have currently. And I think that part of what's informed they are leaving the OPEC so that they can do as they will with their oil. And I'm not surprised with OPEC. Qatar had left a while ago, right? And wanted to concentrate on their LNG and gas. And they're doing pretty well. Save for, of course, the recent challenge with Iran and the United States.
So if the big boys are stepping out or the big producers are stepping out and they can sell as much as they want, for me, my other concern is, will this not also affect pricing, putting aside what is happening in the Middle East?
Oh, yeah, naturally. That's why you have OPEC as a cartel. They want to play around output to impact pricing, right? Question, though, will be whether the volumes of the UAE are substantial enough to... they are substantial, of course, it would impact, but how much impact it would have is a debate, right? And the jury is still out on that. If a country like Saudi was then to step out, then, you're really in for it, right? So I think that it will impact. Everything does impact. Information, volumes available, blockade, almost everything impacts. International logistic challenges, almost everything impacts the oil and gas industry. Even rumors of war can lead to a spike in pricing, right? So I think that it will impact, but we will see how it does impact, particularly after this war, because this war alters much of what we know, right?
Indeed, it does really alter all that we know. But moving on with regards to OTC, and I think it's closing today. What more, talking about Nigeria's participation, I want you to tell us how well are we represented? And also, what do you think? Let's look at some takeouts for us majorly as an oil-producing country too.
Okay, one, the world will leave us if we don't transition. Two, government needs to match policy with implementation. Three, climate concerns are real. Four, I think that we can be, if we do the right things, we can be a good alternative to other parts of the world who also have hydrocarbons. Fifthly, or sixth point is that there's competition for investment, and we need to continue to do the right thing to get the sort of investment we require. You know, a number of projects have reached FID. Some of them are still having conversations and haven't reached FID. So it's critical that government does not only say policy, have brilliant policies, have brilliant people supporting policy development, but implementation, which is the last mile, is very critical to all of that. And I think that that's very important. We're competing, and we're competing for scarce capital, and we need to keep our eyes also on that other competition transition, because if we don't make the most of our oil and gas now, in 20, 30, 40, 50 years, I think the influence of oil and gas will reduce, and we would be at a loss.
But are the local guys driving the necessary kind of growth expected? Let's wrap up with that. Local players.
Yes, they are. See, and a number of them are even integrating. Imagine Ayodele also having a refinery, Walter Smith having an upstream asset, and then having refining. They are integrating. They are looking beyond what we had before now, where a Shell, any of the IOCs, without necessarily mentioning them, are only upstream and do not do anything with refining, and maybe kind of have downstream. And many of them didn't even sell their downstream. So they only did upstream, got petrodollars, and that was it. But the guys who are indigenous also care much more about the last mile. So they produce, they refine, and some of them then also have marketing companies. So I think that's something critical. That integration is critical. The fact that we are developing capacity, technical capacity, they can do due diligence. I'm aware that for a number of these deals, Nigerian law firms advised, and they didn't even necessarily have international law firms. Maybe from the financing standpoint, because some of the financing was coming from abroad, right? You had AFC, which is African. You had Afrexim, right? There were trader prepayment arrangement with companies like Vitol, Trafigura, Shell Western, so they're getting more sophisticated than they've ever been. And in some cases, they are partnering with international guys and consultants like myself are able to do more, provide more services, advisory services, and with the Local Content Act too. I think there's a lot of traction. I just think we should keep our eyes on the ball, and we should continue to support local, whilst of course not making the foreigners feel out of place. We always need forex. And the more the merrier, right? Indeed. The more you have, the more jobs can be available to the average Nigerian.
Dr. Ayodele Oni, I must thank you so much for your time. Energy lawyer, analyst, Bloomfield Practice. Thank you so very much. We appreciate you. You joined us live from Houston, Texas, United States of America, where the OTC is on at the moment. Thank you, and enjoy the rest of your day.
Thank you very much. Enjoy the rest of your day.